Welcome everyone to another episode of Face the Trader, directly here from Stockholm. Beautiful sunny day today, and I'm joined here with my co-host Arif, our managing partner at Scandinavian Capital Markets. Today we have a very special guest joining us all the way from the Netherlands, Cas Daamen, the owner of CDFX Trading. Cas is an experienced trader based in the Netherlands, specializing in FX specifically in the swing trading method. With a keen focus on statistical probability and a commitment to continuous improvement, Cas manages funds for multiple investors and is expanding his fund management services. Cas, it's a pleasure to have you here on the show. Welcome. For our audience out there, just a brief reminder that nothing you get from here is trading advice. Please make sure you do your own research on trading and approach educators such as Cas to learn more about how you can trade, how you can learn, and how you can get into this market. So, Cas, to start off, could you share maybe a little bit something unique or unexpected about yourself that maybe led or influenced you to get into this market?
So I've been trading for 7.5 years right now. I started when someone showed me a book about trading, and I was still studying something completely different. And that's when I got into trading. And that's when I started studying trading next to what I should be studying, which at the time was mechanical engineering. And I didn't like it at all. And I liked trading way more. And that's how I got in touch with trading. And that's, I never stopped learning since then. And it's 7.5 years right now. So,
that's very interesting. And I guess that mechanical engineering studies really helped you on statistical probability, on a lot of the math that goes behind it, right?
absolutely, yeah. So I've always been the guy that was good at mathematics and physics. So really the numbers. And that's what I also put into my trading. So the first 2.5 years, I tried a discretionary approach. It just didn't fit. And that's when I went to mechanical trading, data-backed trading. And that's when I found what I'm good at.
That's great. One thing that I forgot to mention is you've been our guest with our podcast before, which is Trading WTF. So we've been here with Michael. And so thank you so much for joining our new podcast, Face the Trader.
Yeah, no problem. My pleasure.
So, Cas, you've been trading for 8 years, you said now? Is that correct?
Yeah, almost 8 years, yeah.
Okay, awesome. So focusing mostly on FX and using the swing trading model, right? What initially drew you to this approach? How have you evolved this throughout the years?
So I started fully in FX, and then I quickly realized, okay, there are more markets. My first strategy was a swing trading strategy in FX, was on a daily time frame. Naturally, I'm quite a patient person, so swing trading is perfect for me. I also think that, when you develop a trading style, it should fit you as a person. For me, it's swing trading. And later on, I decided, okay, let's take a look at what the bigger funds are doing. What are the professionals doing? And there's not just one guy trading one strategy in one market. It's multiple markets. It's multiple strategies. And that's when I realized, okay, I'm doing FX, but let's take a look at other markets as well. And that's when I started to diversify. And that's what I'm doing right now, learning how to program, building new strategies in multiple markets to really diversify.
Okay. If for the members here of our audience who do not understand the swing trading method, in a nutshell, how would you explain it?
I would explain swing trading as most likely using the daily time frame, maybe the hourly time frame, but it really is about the holding time. So I hold positions for multiple days on average. So I think day trading, within a day, you want to be in and out. Swing trading, you aim to hold your positions for multiple days and therefore catch a bigger trend. That's essentially what you're trying to do.
Interesting. And do you have any favorite assets that you like to do for this? Do you choose like high liquidity pairs, for example, USDN, Euro USD, or do you venture into exotics, metals at all?
My Forex strategy is mainly in the majors. So it's the most liquid markets. Yeah.
Can you describe a typical day in your life as a professional trader and fund manager? How do you balance work and life? I mean, a lot of traders, they face this dilemma because, trading happens throughout your day-to-day life, and you have your phone and you have MT4 or CTrader, MT5 on your phone, and you keep getting maybe push notifications about different market conditions affecting your trades. How do you cope with that on a daily basis? How do you balance things out?
Yeah, that's a great question. So I start my day off with 3 hours of edge development and looking at markets. So the way I trade is really systematic. That also means that a part of my trading is completely automated. It takes me like 15 minutes a day to trade 3 strategies at the moment in all different markets, because I believe in having a very clear plan. Like when I see the market, I know exactly, okay, today we're going to get a setup or we're not going to get a setup. And I think you need to have such a clear plan that there is no doubt. If you have to analyze and, maybe it's a trade, maybe it's not, that makes it very difficult for you. So I believe in having a simple plan. So the first 3 hours of my day, I focus on building new strategies, researching, etc. Actual trading takes me 15 minutes a day. Then during the day, I make sure my phone is off because I really believe in staying focused. So I have a very specific time during the day when I answer, emails and questions and those type of things. But I really have also a centered place or a centered time, essentially, when I focus on my trading and my development to not get distracted. Because if you're distracted during your trading, you're going to make mistakes. That's just how it is.
Yeah, and during the research time that you apply, which is something that a lot of traders need to do. I mean, I don't know if you watch basketball at all, but Kobe Bryant used to get up 2 hours before practice so he could practice before practice. And kind of what you're telling me here is it's kind of similar, right? Which you
Yeah.
you are going through this journey every day where you're preparing yourself to make a trade instead of just, you know, going all into the market. And during this research time, what goes into it? How do you identify potential opportunities for your swing trade strategy? How do you evaluate those? Yeah.
Yeah, so what I do during my development time is researching what other real profitable traders are doing. So people with a track record, people that worked at a fund, people that run their own fund. I research, okay, what are they doing? What are they looking at? What type of strategies do they have? And then I basically try to see, okay, can I make something similar? Can I program something similar? How do they develop those things? That's like where I spend most of my time on. And I think that's how you make progress. I think most traders think they make progress by watching videos or staring at charts, doing analysis. But the real progress and is behind the scenes. It's what you work on when you're not doing the analysis. Taking a trade is just pressing a button, but preparation and developing models, that's where you will make the most returns in the long run. But most people kind of neglect that. Maybe it's the boring side of trading, I don't know. But for me, it's the most important part.
Okay, interesting. And I mean, we saw a few other materials that he put out there, and you talk sometimes about supply and demand dynamics. You talk about order flow, volume play. How do you see those strategy, those indicators per se, as an influencer in your trading decisions?
I believe that the markets are based on supply and demand, and that prices move because there's a disbalance in supply and demand. And supply and demand can be driven by news or company reports, whatever it is. But the foundation of price movement essentially is going to be a disbalance in supply and demand. So understanding that and really understanding, why does a market move up? Why does it move down? What's normal behavior? What is not normal behavior? I think that should be the foundation of trading, and then you can build strategies around that. So I currently have 3 strategies, and they're all based on disbalances in supply and demand, essentially trying to capture a breakout which continues into a trend. And that's how I use those things.
Okay, and you mentioned that you have 3 strategies right now that you're running in your fund, correct? Are those all
Yeah.
the 3 of those are swing strategies? How are they different from each other? I mean, if you can elaborate on that.
Yeah, I can explain it. So one strategy is the daily time frame on Forex, and generally positions are open for multiple days, sometimes multiple weeks. And the other 2 strategies are for indices. One is for the Nasdaq. Usually a position is open for about a day. It's on a bit of a lower time frame. It's really trying to capture a trend that lasts a day or two. And the other strategy is in global indices, so also in different areas of the world. And it's also trying to capture multi-day trends, essentially. Yeah. So it's all swing-based trading.
That's great. Well, And I mean, one of the biggest questions we always ask everyone that comes on this show, because in the end of the day, you could argue that everything about trading comes down to this, which is trading psychology. How do you cope with the risk, with the stress of making those decisions, with your own bias of what you think is happening around the world, right? We are in a very volatile situation around the globe
Hmm.
right now. And, we do have our own biases, we do have our own emotional intelligence, as we can say. How do you cope with that? How are you able to turn that off or, use that to your advantage?
I think two things. First of all, I'm very good at keeping a bird eye view. So I'm not really impacted by, lots of losses in a row or something unexpected coming out. I'm really good at putting it aside and then looking at my plan. Okay, this is what I have to do and focus on that. The other thing is going to be that I really believe that good trading psychology comes from confidence. Confidence in your trading. If you don't have confidence in your trading, you're going to make mistakes. If you don't have confidence in your strategy, you're also going to make mistakes. So a lot of what I do is all back tested. And a back test doesn't mean it's going to continue to work. But if I trade a strategy that has been working since 2007 all the way until now, I know how it works, I know when it works. That really gives me the confidence to follow that strategy during bad periods. So, for example, if I develop a trend strategy and I've tested it from 2007 until now, I know it works, and we're now in a ranging market. Of course, it's going to lose money. And having that backtest as a frame of reference really helps me. Okay, it's normal, it's going to lose money. If I stick to my plan, there will be a trend and I'll be able to profit from that trend. So it's, yeah, knowing your strategy, knowing yourself, your strengths, your weaknesses, um, and also having a bit of realistic expectations. And I think that misses a lot in the retail space. A lot of people think they can make money every month in trading, that they can get a fixed salary every month in trading. That's just not the case. As a trader, you're going to have losing weeks, you're going to have losing months, sometimes even losing years. And I really understand that. And I really get that I cannot win every week and I cannot win every month. And by understanding that fully, I take the pressure off and I know exactly, okay, it's normal. My strategies behave how they should. I should follow my plan. That's it.
Yes, just to kind of chime in here, is there any particular sort of trading loss or win that you particularly remember in your career?
Oh, wow.
Or something
That's
that
a
you
good
really
question.
sort of learned from? It was kind of like a eureka moment, and you're like, oh my God, I learned so much because of this trade or these particular trades.
Not necessarily one trade, because from the beginning on, I always had good risk management. So I always made sure that one trade was not a big loss. So it's not necessarily one trade that really stands out. Um, it was made more like a couple of trades, a batch of trades that was outside of my trading style. That really taught me, okay, what is my style actually? I didn't know that back then, which was discretionary trading. I didn't even know if what discretionary trading was, what systematic trading was. So it was really when I reviewed my last 6 months or so back in the day, I realized, okay, I thought I was trading very systematically, but it was completely discretionary. Every single trade looked completely different. And that batch of trade really taught me, okay, I need to switch gear. I need to go to something else. I need to build something more systematic. So I think probably that's going to be it. It's not a single trade now.
I mean, of course, Arif, you have been involved in the brokerage and asset management space for, what is it now, 13 years, more or less?
Yeah, maybe.
And you've seen your fair share of bad traders, you've seen your fair share of good traders, and we still see that in the brokerage. Uh, so you understand a lot about what goes into trading psychology and all of that. How do you think CAS mentality and strategy compares to, for example, the good traders we have right now in Scandinavian capital markets that manage client funds, etc.? How do you think that the risk management
I
solution
think
goes?
just like Cass said, it all boils down to psychology, right?
Yeah.
Having good risk management and good psychology, effectively.
Yeah, indeed. And I think also the discipline to stick to your plan. I think a lot of people, when they lose 5 times in a row, okay, let's ditch it, let's try something else. And I think the difference between kind of professionals and losing traders is the professionals, they show up even when it goes bad for a week, even when it goes bad for 2 weeks. they show up and they take the next trade and they take the next trade. And I think losing traders tend to throw in the towel too quickly. They tend to not be honest with themselves. So they make a mistake, and the week after they make the exact same mistake again, and the week after they do it again, and they never really face the issue, face that they are the issue most likely, and then work on something to fix it. I think most people don't do that, and that's probably the biggest difference between professionals and losers.
And let's say once you have a loss, you enter into a series of trades and, you couldn't get around uh, and you face those losses. What do you do? How do you cope with that after those losses? Do you trade the next day? Or what is your recovery time, and how does your recovery time looks like?
I basically don't do anything. Like when I lose, I lose. It's part of the job. So the next day, if a trade pops up, or I should take a trade, I'm going to take it. I don't have any routine to deal with losses. I think it comes down to the fact that I've fully accepted it as part of the job. So I don't really get any stress from losers. Losing streaks, like I'm not a robot. They sometimes do bother a bit, but it's not like when, what most people do is when they have a losing streak, they then act on the feeling they get from the losing streak. I don't. If I get a losing streak and it's a bit irritating, I'm okay. I'm going for a walk or whatever, but I'm not acting on that feeling. And I think that's the biggest thing you can do. Like, it's okay to have emotions. We're not robots, but when you have it, don't act on it and overtrade or anything like that. That's the biggest thing.
Yeah.
How would you compare, Cas, the markets obviously trading now as opposed to when you started trading? Is there a big difference in terms of trading the markets today in 2024 as opposed to even 5 or 10 years ago?
Yeah, I think it is, especially in Forex. My main Forex strategy used to perform a lot better in 2018, 19, 20, 21 even. And then after that, the performance declined. The strategy is not broken, but the performance definitely declined a lot. And it maybe has to do with volatility drying up. Maybe the trends are not as strong or as clean anymore. Not sure what happened there, but I can definitely see a change. Yeah.
And how would you say you would sort of tweak or adjust your strategy? Because I know that a lot of traders obviously face this issue where sort of market climate changes. What would you say is the best sort of way to basically adapt your strategy, if you will, to a new dynamic?
There are a couple of ways to do it. I usually try to, so when you're building strategies and when you're backtesting it, there are a lot of ways to do this. One way, I'm not sure if you guys are familiar with it, is walk format optimization. And that's basically where you re-optimize your strategy every 6 months or every year or so. So what you basically do is you take a look at your last year or two. You see, okay, this was the best way of trading it. Let's continue trading that for the next year or so. And then reevaluate again and then upgrade it basically. So that's one way you can kind of keep your strategy in sync with the changing markets. The other thing is what you can do is just make sure that you have 10 strategies for Forex. And if then one fails or has a bad periods of multiple months or years, the other ones can take over. So there are multiple ways to do it. I tend to focus on just building multiple strategies for one asset class and try to not tweak that much and just leave room for them to perform, because essentially what you can do when you develop a strategy is make it fit so perfect to the past that when the market changes a little bit right now, it stops working. And I try to backtest the strategy, not tweak it to the past, so that it has more room to adapt to new environments, basically, if that makes sense.
And looking ahead, what trends do you foresee shaping your trading decisions in the future? Like, is there anything specific that you're looking at? Of course, right now we have a few wars going on around the world. We have inflation cooling down for now, and we have interest rates potentially starting to go down. What sort of trends are you predicting for your trading decisions?
I don't really look at those things, if I'm being honest, because I'm a completely systematic trader. So I know there is a lot of uncertainty right now, and they're changing the interest rates, etc., etc. But I don't really take a look at it at all. I have my systems; they have been tested. I know when they work, and I execute when I should execute, and I don't really. I find it very hard to predict fundamentals. So, okay, what's going to happen the next year or next 2 years? That's quite hard to predict. I prefer just sticking to my systems, making sure I'm diversified, making sure I add systems, and then if one breaks, it's not a big issue. That's my plan.
And how would you recommend for traders who are getting started, who are trying to build a strategy? What would you recommend them to do? The first thing that they would do when they're looking into building a strategy and exploring different strategy methods?
Yeah, that's a very good question. I would start with researching what other professional profitable traders are doing, because you can get a lot of ideas from other professionals for your own strategies. That would probably be the first thing. The second thing is learning how to properly backtest something. Because I think there's also a lot of mistakes people make when they backtest something. So yeah, those two things.
And you have, so you started trading 8 years ago, but you also started doing a lot of Forex education content and mentorships as well. What drove you to do that? What drove you to essentially mentor other traders and teach them your method?
Yeah, so for a couple of reasons. The first thing, as you know, when you're trading, you can have losing months or losing years even, and the bills come every month. So to create more stability in my income, I decided, okay, I'm going to share my knowledge. I'm going to help traders. It's not a course. It's really mentoring people one-on-one. The other reason is going to be that I see so many people learning the wrong stuff and then having to unlearn what they learned essentially. So it's also helping traders. And the third thing is going to be that eventually I want to hire traders to really establish a fund in the Netherlands and hire traders to work here. So if I can now educate them, I can teach them exactly how to build strategies the right way. I can later on hire them and have this team. So those are basically the three main reasons why I do that. Yeah.
Interesting. And are you working with prop firms currently? Are you engaged in any sort of prop firm assessment of funded account?
Yeah, so I trade my own capital, I trade for a small fund, and I trade multiple prop firm accounts. Yeah.
That's great. What is your view on the prop firm market right now at the moment with all the volatility and different issues?
Oh, yeah, I have quite a strong opinion on the prop firm market. I think 90% is going to be gone within a few years. And that's because most prop firms run their business model based on failed challenges. They don't copy the trades to actual live markets. So their only revenue stream is getting people to fail their challenges so they can pay people that make money. I think that's not sustainable. I think right now you see a lot of prop firms already going under, delaying payouts, those type of things. I've also been in touch with other people that are very deep into the prop firm space, and they told me that within now and a couple of years, probably there will be some strict regulations for prop firms, hopefully, to clean up the space. I think 10% will be left. They will offer good opportunities to good traders, and the rest will all be gone. That's kind of my view for the coming years.
Yeah, I would agree to that. We have our own prop firm called Nordic Funder, which is a spin-off from Scandinavian Capital Markets, and we came essentially into that sort of issue, right, where we don't want to just rely on failed assessments, so we don't want to have rules that will incentivize that, but at the same time, we need to have some sort of risk management because it's almost like a double-edged sword where, traders want 90% profit split. But if a broker or a prop firm or a fund, whoever is giving 90% profit split, how can they manage the risk, right? Yep. So we are in a special position because we own the brokerage as well. So we are able to hedge and we're able to run our own risk management on a currency exposure basis for all of our book together, not just the funded trader book, but also the brokerage book. And we're able to mitigate risks by doing that. But for other prop firms that don't have that sort of access, basically the only thing they can do is just decide if they're going to either fully hedge the stuff with another broker or with a liquidity provider, or if they're just going to, take the loss if the client wins. Yeah. And so I think the funded trader market, I think you are spot on. I do think regulations will come. I do think that a lot of the prop firms that are now just offering flash deals and super promos, pay $50 for a 100,000 account and get 90% profit split. Those guys will be gone, and please don't join those sort of companies. Go to
Yeah.
the reliable ones, go to the big famous ones. Of course, we are biased towards Nordic Thunder, but FTMO, great company as well. You can't go
Yeah.
wrong with it. Um, but I think, yes, those prop firms will definitely go under at some point. And what we will likely see is, more sophisticated, a more sophisticated prop product. And we were
Yeah.
discussing this the other day, is that the prop firm market as is right now, it created a new segment of customers called prop traders. So before we had traders. So they would go to a brokerage, they would open an account, and maybe they would take a leap to become a fund manager or manage funds for investors, whatever. And then the space came along and everyone wanted to join it. A lot of people just, couldn't handle it and failed assessments and felt like it was a waste of their time. They were losing a lot of money. But then some people decided to stay and became prop traders. So they are no longer speculating the market. They are no longer treating the market how a trader would, but they are trying just to build strategies that will beat an assessment or that will make the mark on the funded account. And that is kind of the problem, right? Because the whole idea of a prop firm is for traders to manage the markets, for traders that are good with the market to gain capital to trade. And that's, I think, one of the main things that will change in the coming years.
Yeah, I agree. And I think it's necessary because there are just too many bad firms out there. I think people get kind of screwed over by a lot of firms. So I hope it's going to be cleaned up. And I think the prop firms that are going to be left, they can offer even better opportunities to real profitable traders. And maybe the assessments or the rules will become a lot more strict. So it's not, oh, take 2 trades and you're funded. It's going to be maybe a 6-month evaluation period or a year. But then you really filter out the gamblers, the prop traders, and then you get the good ones that actually can trade. And I think that's probably the best way moving forward for the prop industry.
I agree. The one thing I would say for that is that it's not going to fit the majority of the prop traders'
Yeah.
expectations. So that is something that is unfortunate. So with Scandinavian capital markets, for example, back in 2021, so the prop stuff was starting to really take off and a lot of new firms to show up. We started a proprietary firm inside Scandinavian capital markets, but worked differently. Instead of you paying for something, you would just deposit funds with a brokerage. You would go through a 3 months assessment, which essentially said that you can have more than X amount of drawdown, and you should have more than X amount of profit for those 3 months. And if you qualify by the end of those 3 months, we would give you capital to trade, and you would get 30% performance fee. Now, that is a great deal because, first of all, even though you have to put a little bit of your money into it, you're not paying for something. So it's your money. You can withdraw it if you just change your mind, or if you make a profit and you want to withdraw the profit, it's yours. And a 30% profit split is also good. But, again, a lot of these traders, they want the 90%, they want the 75, 85%, whatever it is. And that's where a lot of the conflict of interest begins to happen, because some people will want to sell you this stuff. And when they do sell you that stuff, they will have to do some changes in their rules and stuff to try to make you fail. And that's one of the biggest issues with prop firms, I think.
Yeah. Yeah, I totally agree. And I think, if you take a look at the professional fund management space, they all take a 20% fee for themselves, usually 20%, 25%. So it's quite, if it's also for prop traders, the same thing, it's a good deal. But people think, oh, I can get 90% there, let's go there. But it's not sustainable. No.
That's correct. And I mean, talking about a little bit about risk and your account setup, like, do you have a preferred leverage that you use? Account stop out, like, how does your ideal account setup looks like?
That really depends on a lot of factors. So is it a prop account? Is it my own account? So with prop accounts, I have accounts with prop firms. I know they will be gone in a year or two. So what I do with those accounts is I risk more to get bigger payouts, keeping in the back of my mind that I can lose the account, but they will probably be gone anyway within 2 years. If I trade my own account, the risk is going to be way less. The account that I manage for the fund is also a lot less risk, and I'm talking about 0.33%. So it depends on my strategies. It depends on the type of accounts I trade. If it's with an FTMO, for example, my risk is less because they will be there for the long run. So yeah, it depends on a lot of factors. Yeah, but I think, strategy-wise, it's really looking at what's the risk of ruin, what was the maximum historical drawdown, what can I expect live, and then basing my risk partly on that. But on the other side, for most people, it's also kind of a personal thing in terms of risk management. If you cannot handle risking 1% per trade, don't risk 1% a trade, go less. So it's a lot of factors.
We're obviously kind of halfway through 2024 now, Cas. Do you see any sort of good opportunities in any particular sort of currency pairs, stocks, futures, etc., or even cryptos? Obviously.
Yeah, crypto is also a hot space.
Yeah, exactly. Exactly. So where do you sort of see the market and the capital sort of flying right now?
I don't really take a look at that long a horizon when it comes to predicting trends or things like that. But I do see, for example, in Bitcoin, that people are, at least in my country, Bitcoin is going up, it's going to 100K. Like, people starting to get more euphoric. And that's usually when things slow down. As you can see, Bitcoin has been in a range for multiple weeks right now. So I think there can be a correction that no one expects. Because, when the market goes up, let's celebrate. So I think that's, probably the next 6 months or so, maybe we can see a decent correction in Bitcoin. Other than that, I don't really take a look at that longer horizon, also because my trades are often only open for a few days, sometimes a few weeks.
Obviously, gold's been on a huge bullish run as well.
Yeah.
Because of the war. What are your thoughts on gold? Obviously, we see it kind of consolidating right now. Do you think you're going to, keep on seeing a bullish up to 3,000, or do you think it's going to kind of slow down now?
I do think we're going to continue the trend. In silver as well. I've been in silver so that's a longer term position I took, which is kind of an investment approach. But I've been bullish silver for about 2 years now. And I do think it's going to continue. And usually when silver continues, it's not fully correlated, but it's kind of correlated with gold. So I do think gold will continue as well. Yeah.
Yeah. I mean, obviously, looking at silver, last financial crisis, went up to about 49. So, and it went up to about 29 during COVID, and then it kind of went down. There's a lot of speculation that the banks were sort of manipulating a little bit to kind of keep it below 25 or something like that. But I kind of agree with you. I think we're going to have a huge run in silver, at least to the 49 to 50 level. If not,
that's my first target actually.
Yeah.
So, yeah.
Absolutely.
Cas, do you have anything that you would like extra to share? How people can learn more about you and what you do?
So it's just CDFX Trading.com. That's where you can find more information about me. That's where you can find my track record, my email address to send questions. I get like 10 emails a day from struggling traders, so don't be shy to ask questions. I know back in the day when I was learning how to trade, I was completely alone, and it would have been way more fun, and it would have been way more profitable and way faster to my goal if I had the ability to ask questions. So don't hesitate to ask any questions. But yeah, that's basically it.
Perfect. All right. Cas, thank you so much for joining. Thank you again for joining the podcast once again. And looking forward to having you again.
Yeah, thank you, guys.
Thank you. Next time, hopefully in person here in Stockholm on the studio. Will be good to have you.
Absolutely. Yes.
Thank you.
Awesome. Thank you. Thank you, everyone, for watching. And have a great start to the week, everyone.